Yes, and I think there is another there is another fact that we didn't mention here, is that we might have a third shot that might be mandatory as well. So if you look at actually people that don't want to get vaccinated in the US or in Europe or even in the emerging market, if you add to that you need a third shot, I think there will be lots of confusion, and we might have other variants coming in. So this is there might be a game changer for the market. You know, everybody was only looking at liquidity that was put in the market, and also the fact that the taper will never come, the fact that we will never rise, the Fed will never rise rates, and now we are in front of something more real, something that we are going through a normalization of the economy, and on the other side, we might have several problems with this new Delta variant, and the fact that we need a third shot. So of course this is confusing, and I think the market don't like that. I think that we're going through lots of volatility in the second part of the year that we didn't have until last week, I would say, or 2 weeks ago, and that could be a shock for the market.
John, Karen was pointing out, absolutely rightly to our viewers a couple of days ago, about the crowded nature of some of the biggest gainers and biggest gaining indices, and how there is certain stocks which are basically propelling these markets and perhaps distorting the broader picture. You're picking up the same point in your notes, actually, talking about long tech still being one of the most crowded trades out there as well. If we do get a more sustained wobble, and of course every downtick in these equity markets for the last year and a half has been an opportunity to buy the market aggressively, it's proved right every time. But if we do get a more sustained downtick, how concerned are you about those crowded trades?
I'm really concerned, and if you take historical data, you will see that historically, if you have such a bounce on the S&P 500, so 18% for the first months, the last 6 months is on average the growth of this S&P is 3%. So what does it mean? It means that the biggest of the market, the biggest of this growth that we had on the indices are, I would say, behind us this year. So now, tactically, people will more go through flight to quality. And for example, on the Swiss market, on the blue chips, and we see that there is lots of interest there now, and maybe some of the gaining sector, such as luxury, such as semiconductor, could see profit taking in the coming months, and more, and you will see deferral until defensive stocks and defensive sectors.